Good afternoon. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the afternoon of Sunday, the 22nd of June. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. I'm planning to put on the I'm planning to put up a paywall on these from the 1st of July. So that means the first webinar that I'll be doing, the last webinar that I'll be doing without that will be on Sunday, the June 29th, so in a week. All right, great. Okay, let's have a look at the markets. Now, I did a post on Friday afternoon talking about a bearish scenario that I was thinking had a pretty decent chance of not happening because, as I said, Trump had given a 2-week break on Iran and before he would take any action, but obviously that didn't happen. The chances of that happening are now far higher, and you can see on ES the target would be down to this big support level down here at 58.12, and I think that's now got a pretty good chance of making that target. Now, if that was to make target, I'd be thinking of this mainly as a possible head and shoulder neckline, and I'd be expecting to see a rally afterwards when we got there, but I am thinking we may well make it. And on NQ, we've got a target down here in the 21,000 area. Obviously, we've got the support just under that, and again, that is another possible head and shoulder neckline. On RTY, we don't have a head and shoulders in the short term, or at least not one of a quality that I would draw, but we do have a potential overall double top. And on YM, I think we've got a very nice looking potential level top here, and again I'm thinking we're probably going to go down and we're going to test all these levels. But I would say this Iran conflict, I don't think seems a lot of scope to see. I don't see American boots on the ground. I don't see much prospect of American boots on the ground. I think overall, this is likely to be a limited conflict. I'm expecting to see a limited reaction in the markets, but we will see how that goes tomorrow morning. In terms of DAX, nice looking bull flag here, which is probably going to get killed off on Monday morning, and kind of bullish flag type action here on ESTX, but not very well defined. I rolled both of these into September this weekend, by the way, so likely to go a bit lower, and maybe I'll get some more definition out of it at that point. All right, let's have a look at the bigger picture charts. Okay, looking at SPX, in the short term, we've got a little head and shoulders breaking down. The target is not as ambitious because to get down to that level on ES, we would need to get down to, that I pointed out, we would need to get down to 57.67, 41, because of course the contract has rolled. Watching this with great interest, but really it's the SPX target I'd probably take more seriously, and that is very much a potential. It could be a very asymmetric possible double top support, but really I'd be leaning towards it being a potential head and shoulder neckline. I'd be looking for a bounce when we got down here, and I'd be skeptical about this actually playing out fully. As I said, I don't think the Iran. I think the fact that Trump has gone in is a big deal, but I'm not sure it's a big deal enough to cause a general meltdown in the markets. Looking at the hourly charts, no current divergence. Looking at the daily charts, we were holding the daily middle band. We've been holding the daily middle band across the board, apart from on Dia, like a champ, but we're probably going to lose that on Monday morning, but we'll have to see how that goes. Looking at the Qs, again, we were holding the daily middle band. We tested that again, as we did on SPX. We tested that on Friday. We do have a weak RSI 14 sell signal fix, and we've got one of those as well on SPX. SPX. So that isn't something that I think is hugely significant, but we got another one on ES as well. All right, looking at the Qs, we've got a little head and shoulders here. I've got a target down in the 515 area, but the big area here, this low here that I was showing is the target on the NQ chart. Again, that is rolled. They would need to get down to 505.58 to reach that on the Qs. Looking at Dia. Dia, we've actually seen about 3 days below the daily middle band here. Daily middle band is currently at 43.24. We've been hanging around really only just below it, but nonetheless slightly below it. But we'll see how that goes. But I've got that close below it, and so that one was already showing some weakness. We've got fairly compressed bands here, and I think that's pretty much across the board. So it wouldn't take a big move to get down to the daily lower band. In fact, we need to go through it to get to this target here in the 57.67 area. Looking at the 15-minute chart, no viable head and shoulders here. Kind of looks like a head and shoulders, but it's more of an artist's impression than a real one. If it was a head and shoulders, it would already have not broken down, but I mean, we do have a potential level top here or possible head and shoulder neckline. Looking at IWM, we've got a head and shoulders which is broken down with a target in the main support area, which is down here in 199.10 area. I think that's got a shot. We'll see. I think these big areas that I've been looking at, and I was looking at in the post on Friday, all have a shot. So we will see how that develops. In terms of the daily middle band, that had been holding, but we're probably going to lose that on Monday morning. I think there will be some market reaction. I just don't think it's going to be. I don't see any particular reason to think there would be an extended move down, but we will see. All right, looking at DAX. DAX, we've actually got an open RSI 14 sell signal. We also had an RSI 5 sell signal, but that's already made target. We almost had positive divergence, didn't quite get it when we've been hugging the daily lower band already. We're almost at the daily, we're almost reaching target on this, and possible near miss target is only just slightly below. We could be close to a low here, but it could be that this Iran move is going to move us down to 30 area, which would be the full target. Looking at Nikkei, this has been holding very well just under the daily upper band here and hadn't even tested the daily lower band, but we're probably going to see a negative reaction on here. Obviously, there is also the fact that Japan has cancelled the planned trade negotiations for July the 1st and is expressing its anger with what the US has been doing. That could have an impact on the Nikkei as well, and of course there are some elections coming up. All right, let's have a look at DX. Now, DX has been very interesting lately because we've got a breakup from here, but mainly on the bigger picture. Let's have a look at the bigger picture. And on the US dollar, we've got, on the daily chart here, we've got a potential level bottom here, but on the much bigger picture, we've got, much bigger picture, we've got a possible RSI 5 buy signal brewing, possible weak RSI 14 buy signal brewing on the weekly, but mainly we've got this flag. Now, I drew in this flag support after we saw a reversal up here as the ideal target and possible bull flag that might be forming, and I was commenting there that I wasn't seeing much reason for a bull flag to play out here, but nonetheless US dollar has seen some pretty surprising high retests in the past, and this could be that forming. We've come down, retested it once, we've now come down and tested it twice. We've got a potential double bottom forming, we've got quite a lot of weekly positive divergence. I'm thinking we could see a reversal back up, but it'll be very interesting to see what the impact on DX from this Iran thing is, because there is an alternate scenario here, which is that sometimes the bull flag breaks the other way and turns out to be the topping pattern. If so, this would break down with a target in about the 80 area, and really the key level I'd be watching is this rising megaphone support in the 96 area, because when we made this high here in 114.78, I was looking at this and saying next obvious target within the overall market rising megaphone support, currently in the 95.5 area. Obviously, it's gone up since then. But if we break below that, then this megaphone is starting to break down. And that wouldn't mean that we couldn't retest the high, but it could mean we were breaking down directly. What I'd really be looking for there is if this trend broken trend line held as resistance. If so, I would have an open target down in the 80 area. Looking at the monthly chart, not a lot to see. Looking at the euro. On the euro, the big thing I'm watching here is we've got a big falling wedge that took 15 years or so to form, which has broken up now. Now, are we going to see a retest of the low? First question, we've got a perfect bear flag here, and that actually is a mirror of the one that we've got on US dollar. But again, exactly the same in the inverse could be happening there. Do we have a trend line above? I'd be looking for resistance. No, we've already broken it. Because that was broken here, and this is a very nice wedge, so really I'm looking for a reversal back up after a retest or not, so we will see. Looking at GBP, we've got the same falling wedge, and actually we got the same bear flag. I mean, you know, slight variations, but in effect it is the same setup. Again, I think this is bottoming action. Again, we could see a retest of the low first, but again, bigger picture, I'm looking higher. And next big target would be possibly IHS neckline or asymmetric double bottom resistance I've got up here in the 143.76 area. All right, looking at USD JPY, we've got this big megaphone here. I've been talking about this for a year, very possibly actually. So yeah, it looks like a year actually. And I think we are topping out within this. But we could see a retest of the high here first. We will see. But the main target would be down here. So obviously dollar goes down, USD JPY goes down. There's a lot of things here that are on the bigger picture suggesting that we've got a big move down coming on US dollar. The question is whether we're going to see a high retest first. USD CAD, lovely double top here. It's just beautiful. This is really, really nice, and I'm thinking this has got a pretty good shot at breaking out. Why am I not calling this a triple top? Because there's no such thing as a triple top. It's so it's a double top. So looking at Australian dollar, again, big wedge here. Might be a channel actually. I need to check, but I mean, this hasn't broken up yet, but actually isn't that far away from breaking up, and it wouldn't take a lot. NZUSD, much less certain what's happening here, but this could be a wedge. There's a number of options here, but I've drawn this section here as a smallish triangle. Again, this could break up. We shall see. And I think this kind of triangle often does, but far from always. We'll see. All right, great. Let's have a look at bonds. Okay, ZB. ZB, this is still looking like a bear flag. Now, it may well be that we'll see a move up in bonds because of a flight to safety because of US joining the war against Iran. We'll see how that goes, but really the comments I made when we broke up from here were that either a bear flag is forming here or an ugly IHS has broken up. We've still got both options on the table. We would need to invalidate the IHS, we would need to get down below 111.23, and we haven't managed that yet, and we might not. Still looks like flag and on ZN, and so we'll see. Okay, let's have a look at the bigger picture on bonds. Okay, TYX, bigger picture, this is a potentially very nice looking double top. I'm not rating the chances of this playing out. I think there's too much pressure on bonds to the upside. And actually, one thing we keep hearing from Donald Trump is that, oh, well, the Fed should cut rates and, you know, this would save US dollar up to $1 trillion. Well, actually, as the total interest rate bill for the US is 1.2 trillion this year, then, you know, unless we get down to interest rates of 1% or something, and I think there's almost zero chance of that happening, then it could never save $1 trillion, but it could save some. But when I was doing a big post about bonds in November last year, I was saying that there is a popular misconception which is encouraged by the Fed for policy reasons, and decent ones, that the Fed controls interest rates. But they don't, actually. It's the bond market that controls interest rates. So when you were seeing the Fed cut interest rates last year, rates actually went up. That's because the bond market wasn't buying. And the bond market still won't be buying. So I really don't think it would make any difference at all. So, but I don't think Trump knows that, and that's why he keeps mentioning it. On the daily chart, no current divergence, wondering about a retest of this high in the 51.53 area. Looking at TNX, again, this is a bullish consolidation, I think, and we're likely to be seeing a retest of this high here in the 49.97 area, but this is out of sync with TYX, which is the 30-year yield. The 30-year yield has been stronger relatively. So by the time we got up here, we might actually find that TYX was doing some significant damage to this, to these highs here. This is a big, big level. On bonds, 5%. I think the Fed is likely to defend this level, and the Treasury's already been defending this level by basically buying bonds. And I think that it would take a very strong move to get it over that level. If we did get over that level, I think we might find that 6%, i.e. over 60 here, would actually start becoming the baseline for bonds. And actually, for nations which are as indebted as the US is, that tends to be the starting point for where interest rates are. Looking at the TNX daily chart, no current divergence. On the TNX chart, I've got this basically in a triangle. It's a pretty nice triangle, actually. My lean would be that this triangle would break up, but it's not a strong lean. These often break down. All right, looking at TLT. Possible double bottom here, it appears, but actually it isn't a double bottom because it's too large. Possible smaller double bottom here, but again a bit oversized. Looking at the 60-minute chart, I've got this as a rising wedge. This looks like a bear flag, which would then tend to move down on bonds. So we will see. But at the moment, it's not a bad bear flag, and I'm watching it carefully. All right, great. Let's have a look at CL. Now, CL obviously is going to be a big issue on Monday because we've got US joining the war in Iran, and in the Persian Gulf, everyone is leaving. All the tankers are moving out. They are very concerned about the war spilling over. And I think this is likely to deliver quite a large spike in the oil price. Might be wrong, but there's been quite a few wars and in the Middle East and over the years, and it always tends to put oil prices up significantly. Looking at heating oil, already up a lot, can go higher. Gas oil, you know, when Trump was talking about in May about gas prices coming down to like 195 or 196 or something, kind of I'm noticing whether someone had shown him the RBOB chart on gas lean. So I wondered about that because actually that's the only area where this was down under $2 on this futures chart. So I think obviously it's back up to 232.50 now and probably going to go higher as well. NG, I drew in two possible resistance trend lines, and I'm interested to see that it's pretty much exactly touched one of them and reversed strongly there. Waiting to see whether that delivers. We had a 60-minute sell signal which fixed and made target, but we could find resistance there. So I'm going to be watching the 415 level pretty carefully. I drew that in on 18th of June, and so far that's touched and held. All right, let's have a look at the bigger picture charts on there. Okay, oil. On the much bigger picture, this is the monthly chart. We've got what looks like a falling wedge here, which is starting to break up. Now, I was drawing on here. There are the various levels here. I've got actually made these comments before the news about the Iran war broke, but actually they remain the case. We're trying to break over the monthly middle band. We've got resistance above at the 50. Month moving average at 78.58. I'm thinking this news might clear us over all these obvious resistance levels and clear the obvious next target, which would be this potential level bottom resistance in the 92.48 area. Now, this is a very big level. This was the high in 2023, and this is a potential level bottom resistance trend line. I haven't drawn in that double bottom, but I'm just going to draw in the arrows for you now to show you what might happen if everything goes south in a very significant way. Because I've seen some massive spikes on oil in the past. On war in the Middle East, and we really can't rule out the possibility that we're going to see exactly the same thing here. We will see. But if we were to see that here, let's have a look at where we'd be looking at. This would be a double bottom. I mean, it had actually gone a little lower than I was entirely comfortable with the double bottom. It could potentially be an IHS as well. It's on the verge of being too large, but not actually all there. So this actually is a viable pattern in my view. So I'm going to draw it as one, and I'm going to leave the arrows in. All right, let's have a look. Where would the minimum target be on a breakup? Well, it would be almost up at this high here in 2022 at 126.42. And actually, I think that might have been, I can't remember offhand. I mean, obviously, there have been a few wars in the past, but I think that one might have been about the Ukraine conflict starting. It's the right year, although, and Russia obviously is a significant producer of oil. So these things can get pretty wild. But actually, the double bottom here, the extended target would get us slightly over this high here at 126.42. This is a viable double bottom, and that is what I'm looking at. First test would be this high here at 92.48, which is potential double bottom resistance. And if we saw a hard break through that, we could get back up to 126.42, which looks incredibly high from here. But actually, look at how we got there. in 2022. You know, we'd been moving up from this low here. We were bimbling around in the sort of 70 to 80 area, and then a spike. We could do the same thing again, and we need to be aware of that, and we need to be ready for that. All right, let's have a look at the daily chart. Possible weak negative divergence here. We may lose that all on Monday, but the thing I'd left this channel on, and when I was explaining why I left it on, I left it on mainly because it was just a really nice channel. And really nice channels sometimes deliver. This one's been delivering. We did make a low at the support here, and we are looking for a test of resistance. Now, I think we may well just blow through that on Monday, possibly a gap above. We could see a very strong gap above where it doesn't come back and back test it. This would be a strong break. Now, the target for that really would be a retest of 92.48. So again, that would be the key target. All right, looking at heating oil. Heating oil, bigger picture. We've got a double bottom here. A sustained break over 2.64 would get us back into a target at about the 3.26 to 3.4 area. That is a nice bottoming pattern, and it might deliver. No current divergence on the daily charts, although it was already looking kind of overbought on the RSI. Looking at gas oil, we don't have the same kind of thing here, but we do have a break up from this falling wedge, and we do have another potential double bottom pattern. I'll draw that in. And this, I think at this stage, just given the fact we've got another Middle Eastern war and the US is involved with it, this is the kind of thing which can make the oil market kind of crazy. And here we would be looking at, bear with me, if we were to see a break up from here, and this is by no means an oversized double bottom at all, then really, what would we be looking at for a price of gasoline? Now, this would just be a target. It doesn't need to make it, but obviously a lot of these things do make target. So that wouldn't get us back up into the 2022 high, but it gets pretty close. The extended target would be in about the 3.85 area, and the initial target would be... well, that would be in about the 3.77 area. We could see a very big move up here, and obviously that's not going to do anything positive for the US inflation numbers at all. So watching that with interest, we will see how this develops. But am I expecting to see a negative reaction on oil? The one that pushes it up considerably? Yeah. Normally, that's what we would see. I don't see anything particularly suggesting we're not going to see that here. Right, nat gas, I'm looking here at the, I'm wondering whether we might see a reversal here. I'm looking at the 200-week moving average, which is being tested at the moment. No particularly key, well, actually, no, there is a key level here on the chart here. We've got the 50 DMA at 3.94, although the 200 DMA is a slightly more significant level in my view. But we've seen the 50 perform quite a lot. Again, it's a big resistance level. We could see a failure here. Looking at nat gas, here we could be looking at an alternate pattern here. I've got this triangle which is broken up, and that actually is a pretty decent triangle. Although I don't find those enormously reliable in terms of making target, I would say. Do we have a decent wedge here? Not really. Not something which I'd be particularly impressed about generally. But if I was to draw a line which I thought would be more logical to get reached, it would actually be this one. And we haven't reached that yet, but we will see. Although, of course, as nat gas switches into the next contract, which is the September contract, we may well find it heads up to 415 there. So we will see, particularly if that high on the hourly chart is retested. Okay, let's have a look at metals. Now, metals, it's hard to see how this is going to be bad for gold. I think this Iran thing is probably going to push us up into this high retest that this has been very slow about doing. Do I have any reason to think that it would reverse there? Not particularly, although we would obviously have a potential level top there. I've got no resistance levels above, really. We've got an RSI 5 sell signal fixed on the weekly chart. I'm expecting to see some decent retracement in the future, not too far, but it could be a year down the line. I wouldn't surprise me. And we haven't reached the obvious target on the silver chart. Silver chart, I've really got the obvious target up here in the 39 area. I've got two trend lines there, and that is where I'm thinking this may go up and may find resistance next week. We will see. Daily chart, we do have an RSI 5 sell signal fixed, and we've got an RSI 14 sell signal fixed, so it would kill both of those off. And we've got a potential little level top here, which is on the verge of breaking down, but I suspect this is probably going to reverse it back up, or at least I'd like to see that 39 target made. On palladium, this really on the bigger picture chart, until we see a retest of 808, this looks a bit lost in space to me. But we could have a double bottom here, but really it would be a better double bottom, and there would be less risk of this being a bear flag if we actually retested this low before going back to 1248. This move could go us back to 1248. Looking at the platinum daily chart, we've got a weak RSI 5 sell signal fixed and a possible full RSI 5 sell signal brewing, and we've got a full RSI 14 sell signal fixed. Might need a bit of a retracement. This has had a hell of a move, but bigger picture, don't really have a strong lean. This could be part of a bear flag. I've mentioned this in bigger picture webinars before. If so, I'd be wondering about resistance in the 1500 area. If we get up there, I'll probably be drawing in that flag, and that could be a more significant high. Okay, looking at copper, we got a nice looking little level top here. I've got it marked in. No sign of that breaking down at the moment, but I'm thinking as if the economy slows, which I think it's going to in the US, and really we're seeing growth forecasts being cut across the world because of the tariffs thing. I think that's going to cut global demand from copper significantly, and could see a big move down that could see this double top make target. We will see how that goes. But I've got this is all familiar territory down in the low twos. We've spent a lot of time there, and that's where we were before, of course, we started this big move up. Looking at GDX, we made the daily sell signal. No, it was the hourly sell signal target. We do have a potential double top here on GDX, and we've got kind of a double top here on GDXJ, which is starting to break down. Don't particularly like it on GDXJ. We'll see. We had an RSI 5 sell signal on the daily chart on GDXJ, which is now made target. There's a case for some retracement here, but we'll see. It might get dragged down by stocks. Okay, let's have a look at the other commodities. So hang on. I think I got excited about gold and forgot the other hourly charts. Silver, we've got a little double top here, which is trying to break down. Probably going to lose that on Monday. Palladium, we've got a little double bottom here, which is trying to break up, and I'm thinking this is improving the chances of that making target. And I've got that target, hang on, in about the 1090 area. Looking at platinum, possible topping action here, nothing particularly convincing. And on copper, we're still trying to break down from this flag and still not succeeding in doing so. This might send this down, we'll see. But obviously, this would be more likely to depress copper than move it up. Okay, let's have a look at the KC chart. KC, during this falling megaphone and during this support here in the 310 area, I'm thinking that's a good area to reach next. And we've already got a possible 60-minute buy signal growing. Looking at sugar, I've drawn in a falling megaphone here too, not making it to the support, which is currently at about the 1590 area, but I'm thinking that may well be coming soon. On CC, we went through the low here, and this no longer looks like a potential level bottom. I haven't drawn an overall pattern here. I'll be doing that before the next one, but really just by eye, I don't think there were any really compelling arguments for a trend line above 7,500, so we may well be heading down to that. Looking at, actually, that wouldn't be far away from this head and shoulder target, but the head and shoulder failed, so it's no longer a target. Looking at CT, I've got a decent looking falling wedge here and possible support, but This is a very poorly based support trend line. We could easily go lower and maybe get a better based one. So if we got down into the 66.20 area or 66 area, we probably have a better option. Looking at lumber, very nice looking rising megaphone. Nothing wrong with this pattern. Nice looking target, trend line target in the 600 area, and this could well be a bear flag on the bigger picture. Looking at wheat, nice break up here, possible wedge resistance here, 60-minute sell signal is fixed, possible double top here. So watching that with interest. If this double top breaks down, that would have a target in about the 570 to 573 area. Looking at corn, potential double top territory here. We've finally made a full retest of this low, so watching that with interest. Weak 60-minute buy signal is fixed, has done very little so far, but could make target. Soy, we've seen a little move down from here. I've got a possible resistance trend line here, which has got me interested, but not hugely so. So we'll see how this goes, but watching this with interest. We finally made target on the sell signal here. On soybean oil, possible overall rising megaphone here, which looks interesting. And is a pretty nice resistance trend line. Watching this with interest, still got a 60-minute sell signal fixed, not that far away from making target. Looking at the live cattle chart, this looks like a bull flag forming. It's not a great flag. I haven't drawn in the trend lines for it, but it does look like a bull flag forming. And actually, I'm wondering about the same thing happening on lean hogs here. So we'll see. We got a 60-minute sell signal on lean hogs, and that hasn't made target yet. Okay, let's have a look at the bigger picture charts on those. Coffee. We're obviously pretty overbought. Pretty high by historical standards. I've got a nice looking possible bull flag here. It wouldn't astound me to see it go straight down through it. Looking at sugar, we've got a very large head and shoulders breaking down with a target in the 6.5 to 9 area. That is a backdrop here which would have me reluctant to get long, and obviously we've also got a monthly RSI 14 sell signal here. Now we've only got one previous one on the chart, but it made target, and the buy signal on the RSI 14 made target too. So far as the history gets us, and this obviously doesn't really constitute a statistical universe, then so far as the history gets us, this has got a decent shot at making target, and that's pointing lower. But this head and shoulders is telling us it might be pointing a lot lower. So although the initial target would be in the 9.05 area, and that this is just an extension target down at 6.5. Looking at sugar, on the weekly chart, no current positive divergence. On the daily chart, possible weak RSI 14 buy signal brewing, and possible wedge support, although not particularly convincing. All right, looking at cocoa, again, by historical standards, we are pretty high. I'm watching the support, which has been very good support so far, at the daily middle band. Monthly middle band, and I've got that at 82.15. If we see a sustained break below that, then we could really open the downside here. On the daily chart, no current divergence, but we broke this short-term rising support trend line, which I'm not really seeing as enormously significant, but I'm just mentioning it because it's there. Okay, looking at wheat. Wheat, we've got a potential nested double bottom here. Didn't quite retest this low here at 495.50, but the main double bottom actually doesn't rely on that low anyway. It relies on this one here at 523.50. So we've got a potential nested double bottom here, and I'm wondering about a reversal back up. Obviously, we've got a wedge that's broken up, and pretty decent wedge too. We'll see how that goes. On the daily chart, no current divergence. Looking at corn, again, we've got a falling wedge that's broken up. These all have a general lean, which is suggesting more upside. This could be a bear flag breaking down. Watching this with interest. Equally, this could be an iron chest right shoulder, although it is a little deep for that right shoulder. On the daily chart, we've got an RSI 5 buy signal fix, which has delivered nothing. That's all so far. Soybeans. This was the one that hadn't broken up for ages, but now actually is breaking up over the rising wedge resistance. Falling wedge resistance. This could equally be a bear flag, and it wouldn't be a bad one. We haven't quite made it still to the obvious flag resistance. I've had this drawn in for a while. We'll see how that goes. On cotton, weak RSI 14 buy signal is fixed on the weekly chart. Overall falling wedge, but we are not close to breaking up from it so far. Looking at lumber, looks like an overall bear flag forming in the short term. We've got this little rising wedge which is trying to break down, and I'm watching the daily middle band at 604.10 for support. And that is everything. So, all right. Brilliant. In that case, watch out for tomorrow morning, as tomorrow could get pretty interesting. I'll be doing an updated version of my post, and I should have that out this evening, and I'll be doing a crypto post tomorrow morning. because obviously both of those need an update, and the bear scenario in crypto has started playing out. In fact, actually, I'll just take an extra couple of minutes and I'll show you that too. This is what I was posting last week on crypto. This possible bear scenario that I wasn't wild about, but again, this really was starting to break down on Friday, and at the moment we've got down to the 126.95 area. Now, when I was looking at my targets on Bitcoin and on the Ethereum chart on Bitcoin, I was looking at this trend line here, and it's gone through that to a possible alternate down here, just below in the 98,500 area. I've got a possible alternate there too. These are all options for a bull flag. And really, until we see some significant support breaks, that's where I'm leaning on Bitcoin. Looking at Ethereum, we've got a possible double. This could be argued as a double top breaking down, but I was giving support in the 2,000 to 2,200 area, and I was seeing this as a possible right shoulder, and this would be the left shoulder. On a larger IHS going across here. So this would be the left shoulder here at 21.35. This would be 21.57. We're more or less in the ideal area, and Bitcoin as well. We could reverse back up here. It doesn't, this Solana head and shoulders doesn't need to make target at a full retest of the low. Although it would be a more ambiguous low if it were to go down there and reject that. So we will see. This again could be a right shoulder on inverted head and shoulders. Inverted head and shoulders, and actually, where would the ideal right shoulder low be? 125.43. That would be a very nice right shoulder on this possible IHS. So we've got a possibility this is about to reverse back up. So I'm watching that with great interest. All right, hope you enjoyed me adding crypto at the end there, but that's a wrap for today. Everyone take care, and I'll catch you guys again on Wednesday.